Welcome back to the channel. If you've ever dreamed of earning money while you sleep, then dividend investing might just be the strategy you've been looking for. In today's video, we're breaking down exactly how dividend investing works and how you can start building a passive income stream that pays you every single month. So, what exactly is dividend investing? In simple terms, when you buy shares of certain companies, those companies share a portion of their profits with you. That payout is called a dividend. Think of it as a reward for being a shareholder. Instead of waiting years to sell your stock for profit, you're getting paid regularly, monthly, quarterly, or even annually, just for owning it. The beauty of dividend investing is that it creates a reliable cash flow. Imagine owning stocks in companies that pay you every month, without having to clock in or out of a job. Over time, as you reinvest your dividends back into more shares, your income grows even faster. This snowball effect is what makes dividend investing one of the most powerful passive income strategies out there. Alright, so how do you actually start? Step 1. Open a brokerage account. Step 2. Look for well-established companies with a history of paying consistent dividends. These are often called dividend aristocrats. Step 3. Diversify your holdings across industries like utilities, consumer goods, and finance. And finally, Step 4. Decide if you want to reinvest your dividends automatically or collect them as cash. Now, you might be wondering, how do you get paid every month? The trick is to invest in a mix of companies and funds that pay dividends on different schedules. For example, if one company pays in January, another in February, and another in March, you can line them up to cover all 12 months of the year. There are also ETFs specifically designed to pay monthly dividends, which can make this even easier for beginners. But before you dive in, remember, no investment is risk-free. Companies can cut or stop dividends during tough times. Stock prices can drop, and focusing only on high dividend yields can sometimes lead you into risky investments. That's why it's important to do your research and balance dividend stocks with other types of investments. Dividend investing isn't a get-rich-quick scheme. But with patience, consistency, and smart choices, it can become a reliable source of passive income that grows year after year. So, if your goal is to create financial freedom and make your money work for you, dividend investing is definitely worth exploring. Thanks for watching. If you found this helpful, make sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss more investing tips. Until next time, keep investing wisely and building your future. What are dividends? Let's start simple. A dividend is basically a reward that a company gives its shareholders. When a company makes a profit, instead of keeping all of it, it shares a portion with you, the investor. These payouts are called dividends. They can be given out monthly, quarterly, or yearly, depending on the company. Think of it like planting a fruit tree. Once you buy the tree, it grows and produces fruit every season. You don't have to replant it again and again, you just enjoy the fruit. Dividend-paying stocks are like those trees. They keep rewarding you for owning them. Why dividend investing is powerful for passive income. Now, here's why dividend investing is so attractive. Instead of waiting years to sell a stock for profit, you're getting consistent cash flow while still holding onto your shares. For beginners, this is great because it builds confidence and momentum. Imagine owning a portfolio of stocks that pay you regularly, month after month. Over time, if you reinvest those dividends back into buying more shares, your money compounds. This means your income grows faster and faster without you having to add more of your own cash. That's the true power of dividend investing. It's passive, scalable, and long-term. How to start dividend investing? So, how do you actually get started? It's easier than you think. Keycap 1. Open a brokerage account. This is where you'll buy your dividend stocks or ETFs. KeyCap 2 research dividend-paying companies look for strong, established companies with a history of paying consistent dividends. Some of these are called dividend aristocrats, meaning they've increased their dividends every year for 25+ years. KeyCap 3 diversify your holdings. Don't just invest in one stock. Spread your money across sectors like utilities, consumer goods, tech, and finance. KeyCap 4 set up dividend reinvestment plans, DRIPs. These allow your dividends to automatically buy more shares, helping you grow your investment even faster. Even if you start small, consistency is the key. How to earn income every month? Here's the exciting part: building a portfolio that pays you every month. Most companies pay quarterly, but if you mix different companies and ETFs that pay on different schedules, you can line them up so that at least one company pays you each month. For example, Company A pays in January, April, July, and October. Company B pays in February, May, August, and November. Company C pays in March, June, September, and December. Together, they cover all 12 months. There are also dividend-focused ETFs that are designed to pay investors monthly. These are great for beginners because they spread your risk across many companies while still giving you that steady income. Risks of dividend investing: of course, no investment comes without risks. Dividend investing is powerful, but you need to be careful. Companies can cut or even stop paying dividends if business slows down. Stock prices can still go down, even if they pay dividends. Some high-yield dividend stocks may look attractive but come with bigger risks. That's why it's important not to chase the highest dividend yields blindly. Focus on stability, reputation, and long-term growth.